Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 156, published on July 11th, 2025, titled 2 Eminent ESG Stock Reviews Plus. So, this podcast is presented by Investing for the Soul. Investingforthesoul.com is your go-to site for vital global, ethical, and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. Additionally, please visit this podcast's webpage for links to the articles and additional company and stock information. I have a great crop of 9 articles for you in this podcast. My first article in this podcast is about a favorite stock for ethical and sustainable investors. The title of the article is Apple stock a green investment? ? Net Zero Goals and Sustainable Supply Chain by Saptaki S., seen on carboncredits.com. Here are some quotes from the article. Apple Inc. is a key player in the fight against climate change. The tech giant runs one of the largest carbon reduction programs worldwide, and over 320 suppliers have committed to using 100% clean energy by 2030. This makes Apple an appealing investment for those who care about the environment and want solid returns. Apple's strong finances enable meaningful change. The company achieved record revenue of $124.3 billion in early 2025, a 4% increase from the year before. In the next quarter, Apple earned $95.4 billion, with an 8% rise in earnings per share. Services revenue also hit $26.6 billion, a significant milestone. This success is crucial for investors focused on carbon reduction. The company has cut global greenhouse gas emissions by over 60% since 2015. Manufacturing emissions account for about 55% of Apple's total carbon footprint. The company nearly halved product manufacturing emissions, dropping from 16.1 million tons in 2020 to 8.2 million tons in 2024. Apple produced the world's first carbon-neutral consumer electronics. The Apple Watch lineup and Mac Mini achieved this through emissions reductions of over 75%. Remaining emissions were balanced by high-quality carbon credits from nature projects. These carbon-neutral products have key features: over 30% recycled content by weight, 100% recycled aluminum in cases, and manufacturing with 100% renewable electricity. Apple has made progress in using recycled materials. In 2024, 24% of product materials came from recycled or renewable sources. The company now uses 99% recycled rare earth elements in magnets and 99% recycled cobalt in batteries. Apple's recycling innovations include the Daisy robot, which disassembles used devices to recover rare materials. Additionally, the company plans to use only recycled and renewable materials in its products by 2030. Apple invests in high-quality, nature-based carbon credits instead of cheap offsets. It spends up to $400 million through its Restore Fund programs, aiming for 1 million metric tons of carbon dioxide removal each year. Apple's environmental leadership provides many competitive advantages. Its detailed carbon accounting prepares it well for global carbon pricing. Early use of renewable energy and efficient manufacturing gives it cost benefits as energy prices change. The company trades at a premium price with a price-earnings ratio of around 28, which may lead to volatility risks. The stock has seen volatility in 2025, declining about 19% year-to-date. This may present opportunities for long-term investors focused on Apple's sustainability leadership and financial strength. From the above analysis, we can see that Apple stock is a solid choice for carbon-conscious investors. As global carbon markets expand and ESG investing increases, Apple shines in environmental leadership. Its solid financial resources and focus on transparency make it a top pick for portfolios aimed at climate solutions and sustainable tech. End quotes. Unlike this first article featuring a company which is in nearly everyone's portfolio, this second article features a company that is perhaps new to many of you. It's titled, "Why Temenos is the Gold Standard in Sustainable Banking Tech and a Top ESG Investment." It's by Eli Grant and found on ainvest.com. Here are some quotes from the article. Temenos' ESG credentials are unmatched in its sector. In 2022, it became one of only 13 companies globally to achieve a AAA rating from MSCI's ESG rating system, placing it in the top 8% of all firms assessed. By 2024, Sustainalytics named it a low-risk company with an ESG risk rating of 11.9, ranking first in its industry and sub-industry, securing the top 2% globally. This stellar performance isn't just about accolades, it reflects tangible actions. The company's carbon emissions calculator, developed with Microsoft and launched in COP 2027, allows clients to measure their environmental impact from using Temenos Banking Cloud. This tool isn't just a marketing gimmick. Banks using its cloud platform reduce their carbon footprints by up to 95% compared to on-premise systems. Such measurable outcomes are critical as regulators globally push for transparency and accountability. Temenos cloud-based solutions, like its flagship Banking Cloud and AI-driven Leap platform, aren't just about efficiency. They're a direct response to the existential threat of climate change. By centralizing banking operations in the cloud, Temenos helps institutions slash energy consumption and emissions. For example, a 2024 study by Go Code Green validated that Temenos code optimizations reduced software carbon impact by 32% compared to 2021 levels. This environmental edge is a competitive moat. Temenos leadership has embedded ESG into its DNA. Its board oversees ESG initiatives directly, and the company has committed to science-based emissions targets aligned with the 1.5 degree Celsius warming limit. The results speak for themselves. Temenos retains EcoVadis Platinum status, top 1% globally, and was the sole software company to rank in the top 1% of S&P's 2024 Sustainability Yearbook. For investors, Temenos offers a rare combination of growth and values. Its cloud revenue grew 22% in 2023, with over 700 clients migrated to its platform. Demand is accelerating. Meanwhile, regulatory tailwinds like the EU's Digital Operational Resilience Act, or DORA, and global carbon pricing mechanisms are creating urgency for banks to modernize their tech stacks. Critically, Temenos ESG leadership attracts capital from ESG-focused funds. Companies with top quartile ESG ratings historically outperform peers during market downturns, a trend that could amplify as climate risks materialize. Temenos isn't just a tech vendor, it's a sustainability pioneer. Its unrivaled ESG ratings, climate-conscious products, and strategic foresight position it to capitalize on two mega trends: the digitization of finance and the global push for net zero. For investors, this is a stock that checks all boxes: ethical alignment, growth potential, and resilience in a volatile world. For ESG-focused investors, this is a must-hold. End quotes. This next article is the first of two articles on dividend stocks that might interest ethical and sustainable investors. Its title is VZ, or VZ, named a top socially responsible dividend stock by BNK Invest and found on Nasdaq.com. Here are some quotes from the article. Verizon Communications Inc. has been named a top socially responsible dividend stock by Dividend Channel, signifying a stock with above-average dividend rank statistics, including a strong 6.4% yield, as well as being recognized by prominent asset managers as being a socially responsible investment through analysis of social and environmental criteria. According to the ETF Finder at ETF Channel, Verizon Communications Inc. is a member of both the iShares MSCI USA ESG Select ETF, making up 0.43% of the underlying holdings of the fund, as well as the iShares MSCI KLD 400 Social Index Fund ETF, where Verizon makes up 0.63% of the underlying holdings of the fund. The annualized dividend paid by Verizon Communications Inc. is $2.71 a share, currently paid in quarterly installments. End quotes. The second dividend-paying stock is titled Avalon Bay Communities, a top socially responsible dividend stock with 3.4% yield. Again, it's by BNK Invest and is seen on Nasdaq.com. Here's some of what BNK Invest says about this stock. Avalon Bay Communities Inc. has been named a top socially responsible dividend stock by Dividend Channel, signifying a stock with above-average dividend rank statistics, including a strong 3.4% yield, as well as being recognized by prominent asset managers as being a socially responsible investment through analysis of social and environmental criteria. According to the ETF Finder at ETF Channel, Avalon Bay Communities Inc. is a member of the iShares USA ESG Select ETF, making up 0.10% of the underlying holdings of the fund. The annualized dividend paid by Avalon Bay Communities Inc. is $7 a share, currently paid in quarterly installments. End quotes. Now, more articles of interest from around the world for ethical and sustainable investors. Here I list just the title and who it's by. 1. Title: Which ethical ASX ETFs have performed the best in 2025? On 4.com.au by Aaron Bell. 2. Title: Top 20 best performing funds and sectors so far in 2025 on ii.co.uk by Sam Benstead. 3. Title: How Australian Ethical is Beating Active Peers on moneymanagement.com.au by Laura Dew. 4. Title: ESG Investing Quietly Finds New Life on ETFtrends.com by Tob Schreiber. 5. Title: Betting Against the Tide, Contrarian Opportunities in Renewables Amid Trump's Energy Shift on ainvest.com by Harrison Brooks. These are my top news stories with the stock and fund tips for this podcast to Eminent ESG Stock Reviews Plus. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these deeply troubled times. Contact me if you have any questions. Thank you for listening. I'll talk to you next on July 25th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.